Hello, this is Cynthia Fick, and this is the August 6th stock market update. Wow, so this has been one of the more volatile times. Been warning you that maybe it get volatile, that tech stocks might be coming down a bit, and it happened in spades. Friday, there was a jobs number that came out that wasn't as strong as they expected, and unemployment was higher than expected. And so that spooked the market into thinking maybe this economy is really slowing down because of the jobs growth, and we need to be worried about that more than anything. So that started to spook the market on Friday, added to already a normal, healthy correction. We have been up 40% since October of 2023. So again, I've been saying 2 steps forward, half step back. This was another one of those half step backs that then got exaggerated by fears of a recession and slowing jobs growth. And so go into the weekend with that hanging over our heads. And then I get a ding on my phone 10 p.m. on Sunday night. And I made the mistake of opening it. And it was the Nikkei is down almost 13%, the worst since 1987. Various reasons for that. The yen carry, who is yen carry? But no, the yen carry trade was kind of unwinding. All these portfolio managers across the globe had been taking advantage of the negative interest rates in Japan, which was like free money to them. And then they were shorting the yen. They were doing margin against their accounts and then buying stocks all over the globe, mostly in the United States, and some of the big tech stocks. So all this was unwinding, meaning they had to cover their shorts. They were having margin calls, so they had to start selling. So they were selling in Japan, drove the market down, and then it rolled over into the US. So again, something kind of out of the blue, didn't expect this, was happening yesterday and caused our markets to go down quite drastically. So that added to a normal pullback, worried about recession, and then the big yen carry trade being unwound. So yesterday, not good. Was not fun to watch. I do not like that. I know you didn't like it. I really didn't like it. And to see the VIX is a gauge on how, panic, fear, what's going on in the market. It went to 65 early in the morning, which is kind of unheard of, from like normally 12 up to 65. People were scared, almost throwing the babies out with the bathwater type of attitude. So that kind of all added up to a very bad Monday. And so here we are. So what's really true? Let's rise above this noise. It's a lot of noise. And once people start selling, that clicks off all these computerized selling trades. So sometimes the selling begets selling and it gets worse and worse. So that's really what was happening yesterday. So let's rise above this noise and talk about what we know to be true right now. Okay. And that is, again, we were up 40% since October of 2023. And so a pullback is not a bad thing. It's healthy. And it was kind of to be expected. So we started getting some of that. The second thing is the economy is doing okay. We're actually growing above trend. GDP is growing at 2.5%. Inflation's down to 2.5%. They're aiming for 2%. Earnings grew in the last 6 months at 10%. Still, that is really good growth. So this is really more of a correction in the markets, not a recession. So that's kind of the reality of what is going on. If you also notice, interest rates started coming down yesterday. So the bond markets are doing the Federal Reserve's job. They're lowering interest rates. Have you noticed that? So interest rates are coming down, which is what we kind of all wanted. They're coming down naturally with the markets. And the stock market is also giving us kind of getting rid of some inflationary factors there with the wealth effect. If you have a lot of money in the stock market and you see it going down a little bit, you're probably not going to rush out and buy some bigger price items, which again lowers inflation So it's all kind of working together. So right now, this was a good test of your risk tolerance. If you noticed it all, some of you might not have, but if you noticed it, how did you feel about that? Do you feel like you have too much in stocks? Because this is something, it was pretty dramatic yesterday. This is something we kind of have to get used to. If we want to be up 10, 15, 20%, then we need to be able to handle these 3 to 3.5% down days, because they happen 7 times a year. We get a 10% correction, which we just had in the NASDAQ once a year. So this is unfortunately normal. It's all being exaggerated by the geopolitical news that's coming out, and even our own election in the United States. So it's all getting exaggerated. And I said, buckle up your seatbelts. For right now, kind of stay the course, and we'll look to potentially take advantage of the sale in the markets. If you feel strongly that you don't like the volatility of stocks, maybe we need to have a conversation to lower that. And if you want to reach out, we can begin that conversation. So that is the stock market update for August 6th, and we will talk to you next Tuesday. Have a good one. Bye.